Good afternoon, everyone. Welcome to the Unimutual Conference and welcome to our member education session on emerging risks and casualty outlook. Before we begin, I'd like to acknowledge the Boonwurrung people of the Kulin Nation, the traditional custodians of the land on which we meet today. I pay my respects to the elders past and present, and I extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. For those of you who have not met yet, I'm Jade. I'm the new Unimutual Casualty underwriter, and I've been with the Mutual now for about 9 months. This is my first conference, so I'm really looking forward to meeting many of you over the next 3 days. Today's session will focus on claims trends and emerging risks within the casualty market. We'll explore emerging areas of concern that are shaping the liability landscape, along with an update on AI-related issues and coverage enhancements planned for the 2026-27 renewal. I'll now hand over to our Chief Underwriting Officer, Tobias, who will kick off the session exploring claims trends.
Yeah, thank you, Jade. Jesus. Good afternoon from my side as well, and welcome to our conference 2026 here in Melbourne. And it's actually quite exciting to have not just cyber and property, but also talk a bit more about casualty, which I think is something hopefully quite useful for our members. And Jade quickly ran through the topics I covered, so I will talk a little bit about claims trends, what we've seen in the mutual for the last 10 years. Then Jade will talk a bit about emerging risk, what we see in the casualty market as well, and what's coming on the horizon for 2026-27. We have a casualty outlook, and Richard Head will join us at the end of the session for some slides on AI. No presentation without AI these days. So for the next few slides, we have a closer look at our casualty portfolio over the last 10 years, and say the 10. Where were we? Yeah, so the casualty claims trends over the last 10 years, from the protection years 2015 to 24, 25. We leave out 25, 26 because it's a little bit too early to talk about the more recent years, and particularly in casualty. For those who are familiar with them, so the actuarial concepts, we have got things like incurred but not reported. So a couple of claims might have already occurred in 25, 26, but they take some time to flow through to the numbers. For some of our casualty claims, they are reported about 7 years after the incident occurred. Here we show the general and products liability, professional liability, malpractice, and clinical trials claims. So if we look on the left-hand side for the number of claims, we did in the 10 years for Unimutual, we had about 200 claims in those 4 classes in our combined casualty. When I say claims, they are claims that exceeded your retention, the member retention, and actually claims for the mutual. About 60% are for general and products liability, 40% are professional lines, and much smaller malpractice liability and clinical trials with about 1% each. When we talk about claims, we obviously get a lot of notifications from our members, and we look for the same period. We've got 200 claims, but around 800 notifications from the membership. Interestingly, the split into the classes for the notifications is quite similar to the actual claims numbers. So it basically means around 25% of the notifications turn out to be claims for the mutual or exceed your retention. Back. If we look on the right-hand side, the claims costs, so before that was the number of claims, now if we look at the costs, over the same period, we had about $34 million of claims in the mutual, and the split is a little bit different to the number of claims, 40% general and products liability, 61% for professional liability, and similar for med-mal and clinical trials. So obviously from a frequency perspective, general and products liability drives our portfolio. From a severity perspective, it's a bit different. It's a professional liability that's driving the portfolio within the mutual. Moving a bit closer to the general liability trends. So here we have the last in the same period, 10 years, and we look at the average claim size and the frequency within the mutual, the blue line. And we probably see, I would probably split it into 2 5-year brackets, with the first 5 years, 25 to 2019, and I'll come to 2019, 20 in a minute. The average claims is relatively high. We're sort of coming down over the last 5 years. However, the frequency shows a clear increase in the last couple of years. And I mentioned before, there can be some lag, so obviously in the last 5 years, expect to be turned out even with a higher frequency when we talk in the next couple of years. And I see sort of AM actuaries here, they probably know about claim developments within the mutual. The ones that stick out is probably 2019-20, where we had the lowest frequency in our claims numbers, driven by COVID. If you think about general liability, and I'll come to the next slide, it's largely driven by foot traffic. So and what happened in 2019-20, no one was on campus, no one was on the colleges, people stayed at home. So we saw less claims and smaller claims. Driving a bit deeper in terms of where these claims come from, I hope that's readable. Here we show by incident type, and I mentioned the slip, trip and fall, or the foot traffic driven exposures. The largest category in terms of number of claims as well as in dollars is bodily injury. It's no surprise here, but excluding the probably more smaller, higher frequency claims of slip, trip and fall, which tend to be contractors, service providers or students. The third one is harassment and sexual assault, which is unfortunately something that we've seen more and more in the higher education sector in Australia, and definitely something from a frequency perspective, not the number 3. There's third-party property damage, but from a severity perspective, that's something we keep a close eye on at the moment, and we've seen a few claims coming through, not just in the mutual, but in the general higher education sector, and even not just Australia, but also when we talk to our counter parties at mutuals in the UK and in Canada, we see similar trends across those claims. Moving on to professional liability claims, which, remember, that's the second largest exposure we have in terms of number of claims as well as frequency. Shows quite a different picture, much more volatile than the general liability claims. In terms of the average claim size, varies a bit in 24, 25. Is something driven by probably large individual claim, which is generally something the professional liability, where the variability around the average claim size varies quite a bit, depending on the more complex structure of the professional liability claims. Similar to the general liability, looking at where those claims come from, what's the largest driver? Cause complaint is probably our largest in terms of average claims as well as numbers at the moment over the 10-year period. So 70% of the claims numbers come from cause complaints, which large average claims cost. In terms of cause complaints, I just want to stress there's probably 2 areas to look at. One is the individual student complaints on individual outcomes of courses, probably much more important for the sector and for us as protection providers, are class actions, which we've seen, and it's public knowledge in the Australian sector at the moment. There's more cause complaint class actions coming out, and that's something where we keep a close eye on. Again, similar in other parts of the world. In the UK, there's a couple of class actions, and when I talked to my counterpart in Canada, the mutual there, he raises the same concerns from their perspective. So I think the key takeaway for those couple of slides, it's really from a frequency perspective driven by the general liability claims. The severity is driven by the professional liability. I think we see more and more complex exposures on uni, responding to demands in the sector. Unis try to innovate themselves, looking for new revenue sources, and that all bears risks for the sector. And with that, I might hand to Jodie to talk a bit more about 2 of the main issues we've seen in those claim stats.
Thank you, Tobias. So my name is Jodie Nichols. I've been with Unimutual actually for about 30 years, believe it or not, as either a legal counsel acting on behalf of Unimutual defending universities, or in-house in their compliance and managing and supervising claims. So I'm here to talk about course complaints. Definitely an emerging risk, and what I'm going to say is probably next year we're going to be looking at dividing them and actually really starting to segregate what course complaints mean. Historically, they weren't a big claim within Unimutual, so we had them sort of bundled within the one area. But for next year, we'll be looking at actually what those course complaints mean, because we're seeing various different claims by students. And that's why we're getting such a large number. But if we start to segregate them next year, we'll start to see actually what those particular course complaints mean. So we're actually seeing obviously an increase in action. Students are aware now they have a right of action against universities, particularly in relation to educational standards and what they expect from their course. So we're looking at a big part of course complaints is what universities are advertising that they can deliver, and what the student can expect from when they receive their degree, if they get a degree appropriate for what they expect will deliver the outcome that they expect to receive from the degree. And also we're looking at the duty of care that the university owes the students in this regard. So the biggest thing is we're looking at is obviously educational standards and what the universities promote in advertising and in their correspondence with students as to the various standards, what they can expect within the course offered. Now this can be twofold. It can be within the actual course that's offered and the content and the substance of the course offered, but also what we're seeing is actually what they end up with and the degree and whether it actually provides the necessary qualifications that the students expect that they will get a job resulting from their university degree. So they're the two parts of the educational standards that we're looking at, which the universities and various educational students need to be aware of. So we need to ensure that what, as a university and the educational institutions promise, is what we're actually delivering, and in that twofold aspect, in the content and actually the degree or the certificate that the educational institution is indicating it will provide. Is it going to give the students what they expect and what the university or the educational institution has indicated they will receive after their degree? And this mainly is, of course, a job afterwards, a paying job, and where we're seeing the claims and where we can now see a big component of the claim and you can look at one, if a student is delayed by even 1 year in receiving their student course. You know, some courses, some vocations might pay first year out $130,000. So you look, if you have, 100 students who all missed out getting a job because we failed to provide one course in 1 year, that's 100 students at $130,000 each. So this is where the biggest area for student complaints that we need to be looking at. So there are educational institutions and there's standards and grievance bodies, regulatory bodies that the students can make complaints to, which we've listed up there, and students are now becoming well aware of those. Now those regulatory bodies are generally not covered by the protections because, and we'll talk of this a little bit, Jade's going to talk about this in the next slide about legal costs, but those educational bodies, they're not making compensations, they're making complaints about the course and the standard of the course. So it's often not a claim for compensation. So it doesn't often fall directly within the PL or the PI cover, but they have that right to make a complaint about the educational standards offered by the universities. So then we're going to talk about what are the students' legal courses of action. So the first course of action is duty of care, which I'm sure all of you would know of in just general public liability cases where we talk about, someone slipping over and you fail to offer a duty of care to provide safe steps or safe buildings or so forth. But we're actually now seeing duty of care cases in relation to inadequate supervision or instruction in relation to students in the completion of the courses. Now, historically, and I actually ran one of these cases for Unimutual many, many years ago, and we succeeded. The cases on supervision were often related to public liability, taking students out, like, for example, field camps, and we should supervise students like they were high school students. So we, as Unimutual, we defended that case and we were successful, saying universities do not have a duty to supervise students in the same manner as high school students, and which is very important because that's obviously they're adults and we don't have that same duty of care. What is now coming forth, however, is the duty of care in relation to supervision in their academic results and in the provision of academic teaching and supervision. And that's now where we are starting to see cases coming through. We're not seeing the results yet that we can give definitive advice on how that's going to result for students, but we're certainly seeing those claims coming through. Some are being obviously settled if there's clear examples where the university has failed to offer the courses or the supervision that would be expected and what they've advertised. And that's where I can say proud of Unimutual in that we settle cases quickly where they should be settled, where there's claims that are clearly there is negligence, particularly in the duty of care. But if there are cases that particularly affect the industry and the educational sector as a whole, then Unimutual does defend those cases. So if it's going to affect and set a precedent, they're the cases that Unimutual will defend. We're not at that stage yet with this academic supervision, but they are cases that are coming through and they're part of the course complaints. So the next main area we're seeing is disability discrimination. Now, this is an area where we're seeing students complaining about failure of the university to accommodate their various disabilities to either participate in the course or complete the course, or failure to provide the support or the modifications to enable them to do that. Again, this is a difficult area because sometimes students claim discrimination and they might claim that they've suffered economic loss in the fact that they can't complete their course and therefore they've suffered years of loss of income. And sometimes students don't claim that. And this makes a difference in terms of the members and how claims fall, whether they fall within your professional indemnity or whether they fall within their public liability. But this is definitely an area that we're seeing a big a rise in claims is disability discrimination. The other types of complaints we're seeing for students is, again, complaints to regulatory bodies. And again, students are becoming very well aware of their rights and what regulatory bodies they can report to in relation to failure to provide the necessary academic standards which have been advertised or which they expect would be provided or which need to be provided in order for them to qualify, not only qualify their degree, but I think it's really important that we understand the next step, which is to actually secure a job in the vocation that they expect from attending these courses. So that's where our big claim and where we're seeing in terms of the compensation requirements is where you're going to see the big claim. It's going to be loss of future income and how many years do we say that a student has lost income as a result of failure to provide, a university, failure to provide the adequate academic requirements or the outcomes of their course. So again, educational standards, which I think I've touched on. Misleading or deceptive conduct. Now, this is our biggest area, and this is the area that the educational institutions need to be aware of. We need to be highly aware of what we're actually advertising that is going to be delivered in terms of the course in itself and what the course is going to deliver in terms of content. So content is extremely important, but equally important is the degree and what that's going to look like at the end. But also, what is that going to give the student at the end? At the end of the day, the student attends university not for the fun of it. I'd like to think some do stay in university forever, but most of them attend because they expect to get a well-paying a job after the university qualification is delivered. And when that does not occur because of a failure, for example, to provide a particular subject, and it might only be one subject, and a university can be face a whole complaint for a whole year because now they've got to find that subject somewhere else. It might delay their education in doing another course, delay them obviously in getting a job. So this is where the university need to be really hyper aware of the advertising material and what they're promising to deliver to the students. And when next year we sort of break up the course complaints, I'm expecting that this is going to be the area we're going to see the biggest growth in claims, is in the misleading, deceptive conduct. Another area, so these are just when we get a student complaint, these are the various legal causes of action that students have. So I'm just setting them out. Obviously, each student doesn't make each cause of action. They might make one or two or might make all. Depends on whether they obviously have legal representation or not. But breach of contract, again, which is similar almost to our misleading, it's deceptive conduct. It's where they say, the university or the educational institution has failed to deliver what it's promised to when they've signed up to the course. So that's where we're seeing a breach of contract action. So now we're talking about class actions. So this is obviously the new exciting area in Australia, which we haven't seen before, a new area. Seen it overseas first, but we've had sort of our first couple of class actions, not decided yet, but commenced in Australia. And this is obviously the area where we're all most concerned about, and we're getting litigation funders. So I'm sure everyone may or may not know what a litigation funder is, but a litigation funder is an external body that will sit behind the students. So we'll pay for you to join the course of action, and they will take a percentage, if they're successful, of any compensation awarded by the courts or any settlement compensation. So generally, they're quite high percentages, but the students don't mind because they would never be able to afford to commence their own legal action. So that's basically what a class action is. So we've seen these nationally and internationally. The first one we saw is in the UK, which was related to COVID, where students couldn't attend labs to complete their laboratory experiments. Therefore, they didn't, because of COVID, therefore they didn't qualify and didn't receive their degrees on time. Fortunately for that class of action, the courts actually ruled that they were all so different, they didn't satisfy the definition of commonality for a class action, so they were separated into many different actions. So that one was different. But in Australia, we've seen our first class action, which is against two universities, and it was in relation to them again failing to the claim against us in relation to incurred costs, and failing for them to pursue the degrees, the jobs that they wanted to after the courses have been delivered. So this is in its very, very early stages, so we can't give advice on how that's going to proceed, but we expect, obviously, this is going to be a test case, whether it's settled or whether it proceeds to judgment, but it's very novel in Australia and one that we all are watching very, very closely. Again, the main course of action, is, as I set out before, is misleading and deceptive conduct. And again, that's what the universities and educational institutions need to be aware of. So I would strongly encourage universities, you have legal departments. There's obviously, with your advertising, you have requirements in terms of what goes on your brochures and your advertising material. So I'm strongly encouraging you to also consult your legal department about specifically this issue now, and whether it's going to comply, and whether universities and offering or proceeding to offer standards that they not necessarily can meet or guarantee. So the last really education, so I've gone through the litigation funders. So the last area which we're just looking at is now ESG and environmental law, which we're all aware is on the radar, and there's various tranches when everybody has to comply, but that's certainly an area that we're looking at, and Unimutual is, particularly for Unimutual, we're well ahead of where we need to be, but the universities obviously have your own time frames which this has to be complied with, and no doubt students are well aware of what these time frames and what your requirements are there. And the last item, which is going to be spoken to more by Richard, is, which we all are very well aware of, is data and security leaks with students and privacy requirements. So that's a big area which I'm not even going to attempt to go into now. So I am going to hand over to Richard, who is going to talk about the AI and cyber risks, sorry, Jade next. But anyway, they're your main areas. Happy to answer questions about, at the end, things that you can do to mitigate some of those losses, or where they're growing. And again, offline at any time, please feel free to contact me. So I will then now hand over to... Oh, that's me as well. Oh, sorry. No wonder you're giving me the wrap up. Sexual assault and harassment. Okay, again, another area where we're seeing more claims. Now, this one is a difficult one because it's very underreported. We're seeing, and you all would have known about the University of Australia, they did their own big report into sexual harassment at universities, but we're seeing literally 1 in 5 stating that they have suffered some sexual harassment or assault at university, and again, underreported. The difficulty with these claims is that sometimes, and we have a couple of these at the moment, is they arise from teacher-student relationships, which again is difficult for us to manage because they're again in a position of authority, but it makes it very difficult for us as Unimutual to decide, does that mean it's just a one-off case, or are there many other students that this has occurred that we are unaware of? So this is a difficult area for us to navigate. But again, the universities need to be, when you've got one, you have to at least have in the back of your mind there may be others that need to be investigated. Interestingly, and this is a very important case, and I think we've sent this out, which is just very recent. I know it's in relation to churches and the Catholic Church, but the High Court actually expanded the duty of care owed by the churches. So historically, if a priest was guilty of sexual assault or harassment, the church was not found vicariously liable because it's a criminal act. So in the 2026 case, they actually expanded the liability and the of churches, that they can be found vicariously liable in relation to acts of churches, and looking at even at some other institutions. So it hasn't been, they're looking at religious institutions, but it's a High Court case, and we need to expect that we will get someone looking at trying to apply these principles to educational institutions. So it's certainly one that we need to keep an eye on, because it could be a minefield, basically. And so already states and territories are looking at passing their own legislation in response to the High Court case and how they deal with that. But it's a growing area, and so if I'm going to sum up if I've gone over, which I probably have, 2 areas of concern and areas to watch for universities and educational institution will be the advertising and what you promote and advertising in relation to courses, in particular the misleading and deceptive conduct action. And this would be the other one in looking at what the systems and the procedures you have in place now for sexual harassment, because you can no longer rely upon that. I'm not saying you can't rely upon it, but it's an area that soon maybe you might not be able to rely upon the teacher was acting outside their duties as an employee. So certainly an area that you need to look at to watch to improve your protocols and standards in that area. So thank you. We'll pass on now to Jade, and she will now look at some of the improvements that we've made in the casualty space. Thank you.
Thanks, Jodie. I'm now going to quickly run through what we're doing for the next for the 2026-27 renewal season. The first coverage enhancement that we're introducing this year is our legal cost extension. At a very high level, this extension provides reimbursement for reasonable and necessary legal costs. It's important to note that a key feature of this extension is that it operates independently and can respond even if no other insuring clause has been triggered, which is a much broader application. There's no requirement for an indemnifiable loss under another section of the protection, and legal costs can be reimbursed on a standalone basis provided the matter meets the extension criteria. As with the rest of the protection, coverage is limited to matters within the territorial limits and must be connected to business description activities, and this ensures that there's a clear and appropriate link back to the insured's business operations. As Jodie said, this is particularly important, and Jodie, perhaps you could give us a very quick example of how this would work in practice, particularly around the some of the course complaints. I think you've got a little mic there. If you could just give us a very quick example of how that would work.
So historically, if the previous protection wording, if you don't have a claim if the student doesn't actually make a claim for compensation in the claim against the university, then the legal costs in defending that claim in a tribunal, might be the Fair Work or the Human Rights Commission, are not covered or protected by the Unimutual. Now we're looking at providing those costs, notwithstanding a claim compensation is made or not.
Thanks, Jodie. And it'll be subject to its own limits and retention, $1 million limit for legal costs, and I think it's a $25,000 retention per matter. The next protection that we're looking, this slide here outlines our crisis response extension, which we're currently exploring with our reinsurance partners. This will be a new protection that will be offered to members who purchase a general liability protection through Unimutual, and it will be positioned in a similar way to how active assailant cover operates under the property protection. The extension is subject to a $150,000 limit, which is intended to fund immediate crisis response and management activities rather than longer term liabilities. Obviously, if a member wants to choose a higher limit, we can go through that process as well. The protection applies across a broad spectrum of scenarios and is intentionally designed to be flexible, recognising that crisis can take many different forms and is designed to support members through a wide range of high impact and time critical incidents. From a people risk perspective, the protection response to incidents such as foodborne illness outbreaks, major accidents, violent crime, suspicious deaths, student fatalities, and more complex exposures such as murder or radicalisation events. These are situations where the immediate focus needs to be on safety, communication, and operational continuity. It also extends to political violence, including active assailant events, civil commotion, riots, strikes, malicious damage, and terrorism. These are often fast-moving and highly visible events where expert response and coordination are critical from the outset. A key feature of this offering is how it operates once triggered. Members are given direct access to a specialist security firm, SRM, who will immediately deploy the appropriate resources and services to stabilise the situation, manage the reputational operational impacts, and support decision-making throughout the crisis. We're still in very early discussions with our reinsurance partners around finalising the details of this protection, and we'll provide an update to the members ahead of renewal. This enhancement here extends the GPL section to include protection for contractual liabilities that a member has assumed under a written contract or agreement. Any claim made under this extension is subject to the same limits and deductibles and conditions that apply under the general liability section. There's no separate sublimits or alternative claims conditions introduced. It's important to note that the contract giving rise to the liability must be entered into the ordinary course of a member's business, and this extension is not intended to cover unusual, bespoke, or non-standard agreements that sit outside a member's normal business activities. This enhancement has been designed to provide greater certainty around everyday contractual risk while maintaining appropriate guardrails to ensure that exposure remains aligned with standard business operations. I need to be clear that this applies to the general liability section only and does not extend to the professional liability contractual liability, as that's far more complex. Now, this one here, the home birthing exclusion, this responds to a significant shift we're seeing nationally in maternity care practices. Home births in Australia have more than doubled in recent years, reflecting changing preferences, increased awareness, and greater acceptance of alternative birthing methods. While Australia doesn't have a current single nationally consistent home birth law, there have been several important regulatory and policy developments over the past 5 years that have expanded access and formal support for home birth services. Key development in this came in the 24-25 federal budget, where the midwife professional indemnity scheme was broadened to include indemnity insurance for privately practicing midwives attending low-risk home births. This change signals a clear policy intent to recognise and support the role of midwives in this setting. So in response to this and the market and regulatory changes, we're currently reviewing our home birth exclusion. Our intention is to provide appropriate protection for student midwives who are actively assisting in home births, provided certain safeguards are in place. Coverage would apply where the student midwives are constantly under the supervision, guidance, and direction of qualified medical practitioner, and where the supervising practitioner holds their own professional indemnity insurance. This will allow us to support our members and students participating in supervised low-risk home births while maintaining strong risk controls consistent with professional standards. Finally, this last change here around cyber affirmative language is an important enhancement to our professional liability section designed to respond to the ever-evolving cyber-related risks. This extension attaches directly to the professional liability section and provides additional protection for third-party liability, where a cyber-related event results in a claim against a member in a professional capacity. This is particularly relevant in scenarios where a data breach, system failure, or cyber incident leads to allegations such as professional negligence, breach of duty, failure to protect information in the course of providing its professional service. It's important to note that this does not replace a member's standalone cyber insurance, and it sits in excess of existing cyber protections. It only activates once the member's existing cyber protection has been exhausted, and at that point it responds as a secondary layer, addressing any potential gaps that may arise. Now I'll hand over to Richard, who will provide an update on AI-related exposures.
Thanks. Hello, everyone. It's nice to be back. Nice to see you all again. We don't have a lot of time left, so I'll try and keep this as brief as possible. I must say, the room, I feel like I should be giving a speech on behalf of the bride and groom, but I'll stick to cyber and AI. So I think a lot of people, not just yourselves, but all around, have questions about whether their insurance policies respond to AI. I can limit this to cyber if you like, but I think as a general observation, if you're talking about any insurance policy, unless AI is excluded, then the default position would be that it's actually covered. And the Unimutual cyber protection is exactly that, in that position. So if the question on your mind is whether the cyber protection is going to respond to either an incident caused by a bad actor using AI, and they certainly are using AI, the answer to that is yes. There's no distinction between a bad actor using an AI tool to instigate an attack using some other kind of malware or whatever. That's not a distinction that's drawn under the policy. And of course, the other scenario is that your members yourself are using AI tools, and I assume most of you probably are, whether it's ChatGPT or whatever. But again, you know, if it's a use of one of those tools that somehow creates the opportunity for the cyber incident, then again, that's covered. So I guess that's really the key message from what I have to say. If anyone's got any questions about that, there's no time to do it now. You can come and ask me later. You might be wondering what LLM stands for. That stands for a large language model, which is a particular type of AI. So, but you could apply that rationale to, I mean, Joe's just mentioned, you know, PI. Same thing. We are seeing, and we're seeing this in cyber as well, we're seeing insurers come out with what they call affirmative statements around AI, and it's to address concerns about whether the policy actually responds. But it, you know, we're seeing that in the cyber market as well. So, for instance, I saw one insurer recently come out and announce, oh, we've now got an AI endorsement that you know, gives cover for deep fake and other things. But that really is just window dressing. I mean, unless it's got a, you know, they're not adding any coverage to the policy. So what if it's a deep fake? So what if it's AI? It shouldn't be excluded in any event. And if the cyber policy is excluding AI, that's a real problem. And it really shouldn't. But the same goes, we're seeing that with PI policies as well. So it's really there just to provide a level of comfort. It's not, in fact, adding anything to the cover that's already there. And I imagine we'll start seeing that in a lot of other products as well. Having said that, we're talking to the Unimutual cyber reinsurer, AXA, at the moment about an endorsement for the cyber protection. They, in the open market out of Europe, and I'll explain why Europe in particular at the moment, but they are using, or they're offering an AI endorsement, and we're looking at whether that has, I suppose, one, has value to Unimutual members, and two, can we modify it to apply to the protection. What that endorsement does is three things. It only extends the third, so most of you are probably aware, hopefully aware, the cyber protection has two parts to it. So it covers first party loss, so losses incurred by the member themselves, but also the other section, which is a liability section, which covers third party claims or regulatory actions against the member. So the first thing it does is that it provides an additional extension to the protection covering claims, so third party claims which result from two specific things. One is what we call data poisoning. So AI tools use data to do what they do. If there's unauthorised access to that data and it's poisoned, or the threat actor does something to it so that it causes the AI tool to malfunction, and that leads to a claim, that's covered. That's really a PI cover, not a cyber cover. And before you have any doubts, yes, if there is unauthorised access that leads to data poisoning, that's a cyber incident that's covered. So this is a liability, more like a PI cover or an E&O cover. Similarly, with regulatory violations, there is only, as far as I know, and this AXA endorsement really is limited to the AI Act in Europe or in the EU. It's expected that similar legislation will be enacted elsewhere in the world, including here in Australia, and the intention would be the endorsement would pick this up. But essentially regulatory actions arising from what the endorsement calls, it's breaches of the Act, failing to secure things, failure to do certain things. And I won't go into all the details yet. And then usage rights infringements, that's really an allegation where the insured or the member is using data to train an AI tool or a large language model that it doesn't have the right to use. So it's accessing data that it doesn't have the right to use. So look, I think the key question's answered. Yes, the cyber protection covers AI, and frankly any other policy should as well, unless it's excluded. Don't be fooled by a lot of the advertising around we offer deepfake cover and all of that stuff. That is simply window dressing. The endorsement, I expect that we will offer that at renewal. And yeah, just keep in mind, like I think just keep this in mind, that if there are members who are actually developing, and I don't know how likely that is, but if you're actually developing your own AI tools or large language models that you intend to offer to third parties, right, that becomes a liability issue and a PI issue, and something that you really need to consider. And that's it.